Let's be honest, nobody likes paying taxes. And that is not a Nigerian issue, it's a global reality. But in Nigeria, tax resistance is deeper, driven by low understanding of tax laws, lack of transparency, and poor trust in the system. In 2020, a study by the Nigerian Economic Summit Group, NESG, revealed something shocking, that only 17% of Nigerians believed they should pay tax. Only 17%. A whopping 83% opposed it outrightly. So the government knows the problem. They are aware that people really do not want to pay tax, and it's because people don't trust the government enough to use the funds for things that will benefit the citizens. History does not speak well for the government in this regard. So there's a need for a high level of transparency when it comes to tax collection and what taxes will be used for. And in all fairness, this new tax reform is not necessarily about punishment. It's about fixing that broken structure that we currently practice. If you must know, this new tax law is not a brand new tax system. It's a restructured version of existing laws, focused on consolidating multiple taxes, removing loopholes, introducing clearer thresholds, and widening the tax net, which, however, is the biggest change. More people and businesses are now going to be captured, and people don't like that. People don't want to pay tax. And you have to understand that for years, big players have exploited this imbalance, and for years they've legally avoided taxes easily. Small businesses have always been overtaxed. Investors got little or no incentive, and few people were paying these taxes. So this imbalance is what this reform is trying to correct. Now let me try to clarify something very important. You are not going to be taxed on every naira that enters your account. You are going to be taxed on profit as a company, and as an individual, you're going to be taxed just on your income. Which is why record keeping is now non-negotiable. Invoices, receipts, expenses, ledgers, very important. You have to keep record, because if you don't have record, government, or let me say the tax man, will assume everything is profit. You have that responsibility of self-assessment. As a company, you have to let the government know what the revenues are and what the profits are. As an individual, let them know what your real income is. Go to the government, do self-assessment instead of the tax man coming to you. Another thing I would like to talk about is the tax exemption thing that companies will benefit from. You see, it's only limited liability companies that would enjoy the 100 million revenue exemption. If you operate as a business name or an enterprise, you're still going to pay your personal income tax. And this is an intentional act by the government. Government wants businesses formalized in line with global standards. It's only in Nigeria where companies are not incentivized to formalize their businesses. In most developed countries, people understand that by the time they register their business as an LLC, they tend to benefit from some tax incentive. And the otherwise has always been the case for Nigeria, where businesses are not really incentivized to formalize their business. Because when you do this, as a company, you tend to have more structure, you tend to take corporate governance very seriously, you tend to position your business for more scalability, even global scalability. You tend to employ more people, and in return, you tend to support economic growth. That is why this new tax law is also giving such incentive in order to, incentivize businesses to formalize their business, register as a proper company, and also create room for them to grow easily, and in return, support economic growth. Now, let's talk about how this entire taxing affects real estate, what you should be concerned about as a real estate investor. You see, many people are going to lose money in Nigerian real estate, not because the deal is necessarily bad, but because they don't understand taxes. So let's try to break it down. As a real estate investor, the number one tax you should be concerned about is capital gain tax. Anytime you sell a property at a profit, of course, capital gain tax applies. Now, say for example, You buy a property for 70 million and you sell it at 100 million, you have a profit of 30 million. Capital gain tax can take 15% or more of that gain, depending on structure. And by structure, I mean, are you buying it as an individual, or do you have an LLC, a company registered to do all your real estate transactions for you? Depending on the structure, it can take 15% or more. And you also have to understand that from that 30 million naira profit is gain. You also have to deduct expenses like agency fees from it, right? So what this means in general is that buying property to flip without tax planning is no longer a smart strategy. You need to always ask, what is my after-tax exit, right? Another tax you should be concerned about is VAT. Now, here is clarity that many people miss about VAT. VAT is exempt on sale of land. VAT is exempt on sale of residential property, on rent, residential rent. But VAT still applies to services surrounding real estate. And what I mean is services like agency fees, like legal fees, valuation, facility management, and the likes. VAT did not completely disappear, it was just shifted, right? So another tax you should be concerned about is stamp duty. This is something that already exists, and I believe a lot of people who practice in Nigerian real estate understand this already. All real estate documents must be stamped. Your deed, when you're registering them at the Lands Bureau, they have to be stamped. That's the stamp duty you pay for leases, mortgages. So if you don't stamp this document, it's, most likely they won't stand in court, and the document may not be registrable. They will not even be registrable. They won't be registered, not me, right? So stamp duty is very important. It's something that already exists, and a lot of people already know about it. Another tax you should be concerned about is withholding tax on rent. Now pay attention here. As a landlord, if your tenant is a company, they can deduct, or they will deduct 10% withholding tax and remit it to FIRS, and in this case, not FIRS anymore, NRS, Nigerian Revenue Service. So they pay you the balance. And that is not final tax, it is an advance on the tax you are meant to pay. And your responsibility here is to file properly, because if you fail to file properly, you could end up paying twice. Another tax to be concerned about as real estate investors is property and development levies. This is more of a state thing. State government too are stepping up enforcement. Development levies. We can also categorize land use charge here. And in prime locations, this can reach like 1% to 1.5% of property value annually. These are costs you must also build into your returns. You have to plan for them ahead of time. Another tax to be concerned about is now tax on rental income. Rental income is income. After deductions and necessary leaves, necessary expenses you can deduct from the rental income, what remains is taxable. Rent is no longer something you can sweep under the radar, right? Another benefit now for tenants now is that you get a 20% of your rental value as we leave annually, but up to the tune of 500,000. But the mistake I think a lot of people make now is that people just say you're entitled to a rent relief of 500,000, but it is actually 20% of your rental value, but up to the tune of 500,000, not just 500,000, right? So let's say, for example, now you buy a property for 70 million, you sell 100 million, you make a profit of 30 million, and then let's say you pay agency fee of 1.5 million, you have a net gain of 38.5 million, and then you pay capital gain tax of 15%, you get 4.27 million. Your real gain in this case is just 24.2 something million, right? So you have to understand, when you're buying a property, you have to know all these numbers ahead of time. Say another example, you buy a rental property of 500 million. Your rent is 18 million annually. You have expenses like maintenance and others for 3 million. Your rental income before tax, 15 million. And let's assume the applicable tax rate here is 20%. You pay a tax of 3 million. Your net income is 12 million. So if you're buying that kind of property, you should be able to know what tax you're going to be paying. You have to know it before going into that deal at all, right? And one of the things this reform is doing is sending a clear message. Speculation is expensive, but long-term holding is predictable. Smart investors now, they don't need to fight the system. They have to structure around it intelligently, right? In today's Nigeria, whether you like it or not, tax ignorance is more expensive than bad location. So my dear real estate investors, please take your tax knowledge very seriously. I hope you got some value. I'm Kabiesi, and this is my kingdom.